Thank you all for joining us today as we dive into former President Donald Trump's tax returns and the public policy lessons we can learn from them. My name is Sarah Christopherson. I am the Legislative and Policy Director for Americans for Tax Fairness. We're a coalition of over 400 endorsing organizations united in support of a fair tax system that works for all Americans. And I'm being joined by my ATF colleague, Mara Quint, who's assisting me behind the scenes. A couple of notes. This briefing is open to the public, and in our audience today is a bipartisan, bicameral cross-section of congressional staff and outside experts. And our goal is to really foster a lively conversation with questions from you, the audience. This briefing is being recorded. You probably got that notice when you signed in, but we ask any press in attendance to reach out to speakers afterwards for direct quotes. Quick overview of why we're here. As you know, in 2019, the House Ways and Means Committee requested 6 years of then President Trump's tax returns under Title 26 of the Internal Revenue Code. The Trump administration refused the request, and the ensuing legal battle over President Trump's tax returns wasn't resolved until last November, when the Supreme Court rejected a request from his legal team to block the Ways and Means Committee from accessing his returns. In December, the committee voted to make the returns public, and both Ways and Means and the Joint Committee on Taxation issued reports with their findings. What we've learned raises questions about how the IRS currently audits and fails to audit the complicated returns of the ultra-wealthy and the strategies that wealthy taxpayers use to reduce their tax payments. I probably don't need to tell any of you, but this is particularly relevant heading into the 118th Congress. The Senate is set to consider the nomination of a new IRS commissioner later this winter. The House has already taken one vote to repeal most of the new funding granted to the IRS, and additional votes and committee investigations, are expected. News reports have also indicated that the House may vote on the Fair Tax Act, which, among other things, would abolish the IRS altogether. And we know that the debate about IRS funding is likely to spill over into some of the budgetary fights later this year. So our experts on the call today pored over the tax returns and the reports, and they're ready to share their insights. We'll start off with a few kind of big picture questions for our speakers, and then we'll turn to all of you in the audience to ask your most probing questions. But let me first introduce Steve Rosenthal and Jean Ross. Steve is a senior fellow at the Urban Brookings Tax Policy Center with expertise on a range of federal income tax issues and a particular focus on business taxes. Before joining the Tax Policy Center, Steve practiced tax law in Washington, D.C. for over 25 years, served as a legislation counsel with the Joint Committee on Taxation, and is the former chair of the taxation section of the District of Columbia Bar Association. Jean is a senior fellow at the Center for American Progress with expertise on tax and fiscal policy. Prior to joining American Progress, she served as a program officer at several national foundations and as the first executive director of the California Budget Project, now the California Budget and Policy Center, for nearly 2 decades. She also previously staffed the California State Assembly's Revenue and Taxation and Human Services Committees, and currently serves as the chair of the board at the Fiscal Policy Institute of New York. So we are thrilled to have both of you here today. Jean and Steve, you've done the deep dive. Let's start with what are your big takeaways from what you've learned? We'll start with Jean and then turn to Steve.
Thanks, Sarah, and thanks to all of you for joining us this morning. I think my first takeaway was, in a lot of ways, they were kind of boring. I think you count me among the people who thought that there might be some hidden bombshells somewhere in the tax returns. There weren't really any, at least that I've seen or I've seen reported on since then. But really what came away so striking to me was the extent to which the story that they tell in the JCT report, the Ways and Means report on them, is about the underfunding of the IRS and the inability of the IRS to cope with, to appropriately audit tax returns that of the ultra wealthy, super complicated tax returns, and the extent to which the IRS is really outpersoned and outgunned by taxpayers that choose to take an aggressive tax position. I think we learned that a lot of the press reports of what was in the former president's tax returns were probably pretty well sourced. So we had seen, a lot of what was in the tax returns before in the New York Times, other reporting as well. And lastly, and I think we'll get to this as we move through the hour, I think the returns do raise some important questions about the mandatory audit program going forward and how, the need to codify some of the provisions governing that program, and also how to think about the business operations of any president that has complicated business activities that they continue to earn money on while they're in office, and particularly complicated business operations in countries that raise sensitive foreign policy considerations.
So thanks, Sarah, for including me. And I agree with Jean. To some extent, 2015 through 2020 is rather boring. Not a surprise that it was boring. I tweeted that I expected it to be boring, in part because Trump's tax accountant testified last month in the New York criminal trial that he advised the Trump organization to file squeaky clean tax returns once Trump got into office. But yet they still show a lot about Trump's financial life and in important ways. He showed virtually no taxes for the period 2015 through 2020. And that caps the prior 3 decades in which he reported virtually no taxes. And how does he accomplish that feat? Well, he loses money or reports to lose money in his businesses year after year after year. All 6 of these years, Trump lost money in his businesses. He made a profit in 2018 and 2019 because he had some capital gains, sold some stocks that he had inherited from his father. But still, year after year, his businesses lost money. And I mentioned 2018 and 2019 were profitable. Those are the only profitable years or positive income years that Trump has reported from 1985. He has losses year after year and reports either 0 or tens or hundreds of millions of dollars of losses year after year. How does he pull that off? Well, that's the $64,000 question. And we'll discuss in part some of that later. Are the losses real or have they been inflated? Either inflated by claiming personal items, say, as business expenses, or inflated by complex and abstruse tax planning. I've spent many years looking at Trump's taxes, testified to the Ways and Means Committee a couple of times, helped the New York Times unravel the $916 million of net operating losses from 1995. And I can tell you, Trump is extraordinarily aggressive, taking positions that I never would advise anyone to take in practice. So what happened when the IRS took a close look at these 2015 through 2020 tax returns? Well, as Jean signaled, virtually nothing. One agent started the first presidential tax return in Trump's 3rd year, and the other 3 presidential tax returns, subject to a mandatory audit, only began after Trump left office. The IRS was completely outgunned, as Jean puts it, or outpersoned. And then the final question I think we're going to touch upon in this hour is, like, what should we do about this? Well, what systemic issues does Trump's tax returns and his failure to pay taxes for decades, what does that tell us about our tax system and how can we improve it? And that's a question Jean and I have discussed that we really are eager to address, and certainly encourage all of you to ask questions. It's a lot more fun if you ask a question and we address something on your mind. Anyway, Sarah, back to you. Thank you.
Well, yes. So, and I have a couple of questions lined up that I would love to hear from Steve and Jean, and then I am going to turn it over to the audience and also give you two quick tips on how to ask questions. But Steve, so you sort of raised this question because I know a lot of the former president's allies have talked about, well, Trump is just being smart, right? So he's taken aggressive positions, but he's just being smart. He's lawfully exploiting the loopholes that Congress put in place to reduce his taxes. Why should we sort of hold him to a higher standard than what Congress has required him to pay? What are your thoughts to that claim?
Yeah, I think that claim is largely rubbish. Trump will claim he just avails himself of generous depreciation schedules. As many of you in the audience will know, our tax laws allow deductions for depreciation to be accelerated. But those should turn around at some point. If you accelerate deductions, you have income later at some point. 35 years of losses is incredible. Now, looking closely at some of Trump's early years, the 1995, 916 million of loss, that was a position that even his lawyers told him that he was unlikely to prevail if the IRS found and challenged him. He used those losses to avoid paying taxes for a decade. Eventually ran out of losses, and in 2009, he generated another $700 million of losses that the New York Times, in some very great reporting, traced to the abandonment of a partnership interest. And to abandon a partnership interest from a tax practice standpoint requires that you completely abandon it without anything in return. And Trump apparently had consideration in exchange for so-called abandoning his partnership interest. Interestingly, that $700 million of losses gave rise to what's known as a quickie refund, because losses, if they can't be used in a year, can be carried back and carried forward. Trump claimed a $73 million refund, and then he carried forward those losses. And in fact, the first year of the 2015 to 2020 period, Trump carried into that period $105 million loss. So Trump uses these mega losses to avoid paying taxes. And in my experience, looking closely at the 916 and evaluating the $700 million loss of 2009, I think he went too far. And in fact, it appears, if best we can tell, the IRS never caught and challenged the 916 million of losses. But they did apparently stumble across the $700 million of losses that he took into the presidency with him. He was under audit. The IRS was looking at that audit. Those losses carried through 2018. And the earlier audits for this 2009 through 2013 period were never closed. And so maybe one day we'll see the IRS stand up in court and try to collect on the $700 million of losses and interest and penalties if they're applicable. That's still an open question. Thanks, Sarah.
So I've got one more question for you, kind of in a similar vein, because you talk about the audits that were never started and never closed. You mentioned that the presidential audit that the IRS was required to undertake didn't start to his third year. And if I recall correctly, they started the same day that House Ways and Means Committee requested his returns, right? That maybe played a role in their deciding. So it sounds like, I mean, you both have mentioned the IRS being outgunned, outpersoned. I love that. What has been the sort of impact of years and years and years of perhaps underfunding the IRS in their ability to tackle some of these incredibly complicated returns?
Well, you might have thought a mandatory presidential audit would be the high water mark for the IRS auditing. You would expect, given Trump's prominence and given the IRS responsibility for auditing him, that they would have devoted a lot of effort to the task. And in fact, they didn't. One agent for the 2015 and 16 years, she added 3 other agents for the 17, 18 going forward years that started after Trump left office. But look, the IRS is completely outgunned. When I was in practice, we would play a game called whack-a-mole. The IRS would raise a question and explore an area of liability, we would knock it down. The IRS would raise another question, and we would knock it down. And eventually the IRS would give up, not because there wasn't a liability, but they couldn't figure out what it was. And so Trump, with his sprawling empire of 500 LLCs and subchapter S and other pass-throughs operating globally, is a very difficult challenge, especially for someone who's notorious for obstruction and delay. And I think the lesson we can take is the IRS does a very poor job with these complicated enterprises, especially with pass-throughs, as Chairman Wyden has highlighted over the last couple of years. But Trump demonstrates that the IRS basically couldn't touch him.
I want to jump in here, and I think it's important, but I think, again, going back to what's particularly interesting and significant about the tax returns is the situation of the former president isn't unique. The former president is a wealthy individual, or at least has the business operations that would used by people of great wealth. As Steve mentioned, some 500 pass-through entities that are nested within one another. And he also had a fleet of attorneys, a fleet of accountants to coordinate, file taxes, keep the books on all of those operations. And I think there's some important things that transcend the individual case of the former president. The first thing, and again, like sort of things that jumped out at me when I read through the reports, was the IRS's presumption, and this was in the audit notes for a couple of the different years of returns reported in the JCT report, is the auditor's presumption that because the taxpayer had accountants and lawyers doing their taxes, they must be correct. And that ignores a whole body of research on the role of so-called enablers. And there's certainly, and by that, sort of tax professionals that make a living by pushing the envelope, by pushing tax avoidance, tax planning strategies that cross the line between using all of the provisions of the tax code to the taxpayer's greatest benefit, maybe crossing the gray area. And we know from the recent conviction of the Trump Organization in New York that certainly they have misstated certain expenses and deductions in the past in a way that did not meet legal muster. But let's step back and say, why is the IRS unable to go toe-to-toe with large, complicated, wealthy taxpayers? It's not an accident. It was by design, and that design was decades of budget reductions. Between 1991 and 2021, the IRS workforce dropped by nearly a third. During that time, the US population increased by a third. We saw a dramatic shift in the way businesses are organized away from the old-fashioned C corporation towards these complicated pass-through entities that intermingle business earnings with those of wealthy taxpayers. And those budget reductions decimated the agency's ability to engage in and really competently and thoroughly audit the tax returns of wealthy individuals and big businesses. And that's why we have the problem. And even in such a high profile, important case of the mandatory audit of a former president, the IRS wasn't able to take on and devote the kind of resources. And again, and if you go back through the notes, and I think this is one of the more interesting findings, you saw the representatives of the former presidents, pushing back when the IRS tried to bring on more staff specialists to look at certain elements of the tax return. They ran the clock and they pushed back. And I think, the former president isn't alone in taking that approach when dealing with the IRS. Again, I think if you look, at what's happened as a result of the IRS budget cuts, we've seen the greatest reduction in terms of scrutiny coming at the top, because those are the tax returns that take a lot of time, they take a lot of resources, they take specialist staff, but they're also the ones that generate the largest amount of revenue. When the IRS is able to do its job well, that brings money that supports federal services. It also has a deterrent effect, and it helps make sure that our tax system functions the way Congress intended it to. It helps ensure that our tax laws are enforced fairly. I could go on this one, but I do think it's important to generalize, back to how this affects the tax returns of the wealthy big corporations more broadly.
Yeah, that's fantastic. So I actually have so many more questions I would like to ask and have queued up, but I do want to take some time now to open it up to the audience. So there's two ways to ask a question. You can write your question in the Q&A box by clicking, there's an icon at the bottom of your screen, and then I will read it out loud to the panelists, or you can click on the raise your hand icon. And if you raise your hand, then Maura will say, Jean, I'm unmuting you, and you will get the option to unmute, and then you can ask your question directly. We'll be able to hear your voice. The limitations of the system, we won't be able to see you, but we will be able to hear you. So please either use the Q&A chat or please use the hand icon, and then Maura will let you know you've been unmuted. I don't think anyone has asked a question yet. Oh, I see we have one hand raised.
Mark Rickling, I'm going to go ahead and ask you to unmute yourself.
Hey, it's Mark Rickling from the Office of Congressman Lloyd Doggett. Thank you so much for having this incredibly informative session. Really appreciate it. Definitely hear everything you have been saying about the importance of restoring the IRS's budget so it is able to enforce the tax laws that we have currently on the books for high-end filers. But just curious, sort of beyond the $80 billion that Congress is restoring in the Inflation Reduction Act, and the importance of getting the agency the resources it needs in the annual appropriations process. Are there other things that Congress should be looking at to help the IRS's ability to ensure that the tax laws are enforced at the higher end?
I think certainly, and beyond defending, maintaining the 80 billion, which is critically important, will be to make sure that the annual appropriations for the IRS keeps pace with inflation, that annual operating appropriation is made will be absolutely necessary. I think there are a number of issues, and Steve mentioned some of the ones. The JCT report mentioned some of the areas that are close to, maybe over the line, maybe not over the line. I think there are a lot of issues that are ripe for oversight for Congress to do. I think certainly the role of pass-through corporations in our economy is one. We've seen a tremendous shift in the way businesses do business over the last couple of decades. I think it's important to step back and to make sure that we have laws that are appropriate for that. That would certainly be one. Conservation easements, again, this has been a high profile issue in the Trump tax return. The December omnibus closed a particularly egregious loophole in the conservation easement program by outlawing syndicated easements. I think that's an area that's probably ripe for further scrutiny. Senate Finance Committee has done that in the past. I think that's certainly one going forward. What else? There's so many here. I think certainly with respect to the mandatory audit program itself, it is one that in the House Ways and Means Committee report, there were some, I think, excellent recommendations made in terms of codifying that program, making sure that the IRS has the resources it needs to conduct a thorough audit of the president and the vice president, and that's done on a timely basis, and also that the results are disclosed. I think, again, that's an area that pertains more to the president and vice president than the general case that you're raising as well. I'm sure Steve has some ideas on that one too.
Sure, and I agree with the ideas Jean offered up, especially the pass-through notion. And again, I mentioned earlier, Chairman Wyden has undertaken an initiative for pass-through and partnership tax reform in particular. That's key because in my view, partnerships are so complex that the IRS really struggles to get their arms around. And we allow just way too many choices in elections for taxpayers. And you see that all across Subchapter K, the partnership laws. We have to have fewer choices that reflect economics and not tax planning. And so for sure, we ought to delve into that area. But I would say, so as not to shift too much blame to Congress, the world is a complicated place. And I drafted tax rules at the Joint Tax Committee for 6 years in the 90s, and then practiced for 20 years after that. And inherently, tax rules are going to be complicated. How do you apportion income? What year does income go to? What expenses should be corresponded to that income? Those are all very challenging questions in our global economy. That's not to say Congress can't do a better job of simplifying. For those of you who seek my advice, I'm always trying to figure out how you write a rule that can be administered both by the IRS and by taxpayers. But when you stop and think, Mark, you took off the table the $80 billion, and I echo Jean on the importance of that money. But apart from expanded funding for the IRS, I think the IRS also needs expanded information returns and a more IT budget and help just coming up to speed on where we are in today's economy. I was disappointed at the end of last month when the Biden administration, the IRS, delayed the expanded 1099-K reporting. I know there was a lot of concerns, especially concerns that people might get Venmo reports for personal rather than business transactions. And I was disappointed that some of those concerns hadn't been addressed in the 3 years from the time that the expanded 1099-K reporting was adopted. And so for those interested in the subject, I wrote a piece with a colleague, Professor Hemmel at NYU, just last week, published in the Tax Policy Center blog. It's really important to help the IRS do its job, and information reports are not intrusive. And in fact, they actually can be helpful. I worked on information reporting in the 90s, introducing capital gains reporting to allow cost basis in addition to proceeds to be reported. Why did I undertake that project in the 90s? Because I spent a weekend, my first year at Joint Tax, trying to figure out what my gains and losses were with the dividends reinvested and the like. And I was benefited. I try to file my taxes correctly, and having information reports that help me also help the system. So that's what I would say, Mark. I think that for sure, writing simpler tax rules helps. Trying to stick to economics and trying to get the economics right fewer choices for taxpayers helps, but invariably there are going to be gray areas, and there are going to be taxpayers, in my view, Trump is among them, who try to exploit those gray areas and play hide and seek with the IRS. And for that, the IRS needs more resources and also expanded information reporting.
Can I jump in? I left one of my favorite ideas off the list, and I know we have some other questions. I would say from an oversight and potentially legislative standpoint is the role of enablers. And there's been, I think, a lot more work done in the international arena. I'd point to some of the work that the OECD has done and others, but I think looking to see whether the professional standards, liability rules, regulatory structures surrounding the tax practitioners that advise taxpayers with complicated tax returns would be another area ripe for scrutiny. And one last thing around pass-throughs, and I think why Steve and I focus on that as an important area, is pass-through entities, and by that we mean partnerships, LLCs, S corporations, and other things where the income flows through to the taxpayer. That's how a lot of wealthy individuals structure income so that they pay taxes on it at a lower rate. We've heard a lot about carried interest, other things, but again, sort of going back to a top line of the president's tax returns and of tax returns of wealthy individuals more broadly. Their income, their tax returns don't look like mine, probably don't look like yours. They don't earn a lot of money in the form of wages and salaries. It comes through as Schedule C earnings, capital gains, and the rest. Also inherited wealth. And this is, again, keep going here on a lot of different topics. I think one of the things that was striking about the former president's return is the fact that a lot of his income still comes from money that he inherited from his parents. And that big sort of bump of income in 2018, the capital gain that was recorded, that was when he sold Starrett City in Brooklyn, a property that he inherited from his father.
Great, thank you. So I am going to turn to some of the questions that have been written in the Q&A. So first up, we have Jacqueline, which is, what is the reasoning for the House of Representatives to not allow an increased amount of agents for the IRS? And I assume this is in reference to the vote that kicked off this Congress.
I think there are certainly some members of Congress that prefer to see a weak tax agency because it's a backdoor way of diminishing the amount of revenue that our tax agency collects. I think it is, and that probably, and again, I'm always really careful not to ascribe motives to people. But there has been sort of a long-standing ideology that has tried to undermine our confidence in government. And I think one of the things that we see through a lot of public opinion research is that when people perceive that the tax system isn't fair, it undermines their confidence in government more broadly. And an underfunded tax agency is part of that.
So I echo Jean's comments there. What is the reasoning? I would say poor reasoning. I'm particularly troubled by the politicians who beat up on the IRS and strip the IRS of resources. And then the IRS performs badly. And these same politicians use as an excuse to strip more resources from the IRS and further demonize IRS employees. And the IRS is a tremendous organization. We've given them so many responsibilities over the year, added to the responsibilities because they are so effective, even with their few resources. When I was in law school 3 decades ago or so, I started working for the IRS my first year in law school and worked all 3 years there for the IRS Appeals Office in San Francisco. And the people I work with were all people of good faith, trying to do the right thing for both the IRS collecting revenue and taxpayers. And I think it's hard for an organization and its personnel to continue to be demonized. Yes, they will perform badly. And yes, there inevitably will be some issues, some snafu that you can jump on. But look, I would echo the words of the former Justice Oliver Wendell Holmes. Taxes are the price that we pay for a civilized society. We need the money to fund the services that all of us expect. 3 decades ago, when I worked for the Joint Tax Committee, there was bipartisan agreement by Republicans and Democrats that the IRS ought to be funded sufficiently and ought to be given the opportunity to enforce the laws that existed. Unfortunately, I think that bipartisan agreement, that spirit, has devolved over the decades. And I can't explain why that's happened, but it's pernicious.
So great. I want to give you both a chance in case there's more to jump in, but I do want to get to a couple more questions that have been asked. So I'm going to sort of combine two that I think are related. So Anastasia asks, I was wondering if Trump's tax returns and papers were legal. And I think Justin is asking a similar question. Is there any evidence of illegal actions on behalf of the Trump org, or was this all legal exploitation of existing loopholes?
So can I take that one, Jean? Because it's my favorite question.
Of course.
When I testified to the Ways and Means Committee, both times, there were members of the Ways and Means Committee that would ask me, was there something Trump did that was illegal? And me being a lawyer, I would stop and say, what do you mean by illegal? And then they moved on to the next panelist. Of course you know what illegal means, Mr. Rosenthal, and move on. Now here's the problem. I practiced for 25 years. Lawyers, accountants, practitioners view tax law in shades of gray. There are ambiguities, and we would write opinions stemming from will, virtually certain the taxpayer would win, down to frivolous, that, hey, if you're caught, you're dead. And we could not advise, as a matter of professional practice, taxpayers on their chance of being caught. But over the years, their chance of being caught and even having the issue arise was reduced further and further because of the understaffed IRS. Professionally, practitioners can't tell clients that. But some clients like Trump are smart enough to figure that out. And so Trump clients like Trump will ask for tax opinions to cover themselves so there's some semblance of an argument so they don't go to jail or suffer interest and penalties if the IRS catches them. And you can tell from, I looked at the 1995, $916 million of losses. The New York Times shared with me a bankruptcy file in which Trump had opinions from his counsel that said on reorganization of his casinos, Trump was going to spin off like $500 million of taxable income. And Trump asked his lawyers, can you opine that I will win if the IRS challenges me on that forgiveness of income? And his lawyers said the best they could offer him in one of the several cases, what is known as a substantial authority opinion, which means you have a chance of winning like 1 out of 3 times. There's substantial authority for your position. But they also warned him that if found, he's unlikely to prevail. But Trump went ahead anyway. And I doubt, we don't know for certain, that he reported this $500 million of income. And I doubt that the IRS ever found it, because the IRS simply had struggles with these very complicated reorganizations. So to answer the questions of, was Trump doing something perfectly lawful? Doesn't the code permit it? The short answer is not really. How would you view, as I've written these shades of gray, and those interested in this topic can read a paper that I co-wrote with my colleague, Professor Hamill, and my colleague, Janet Holtzblatt at the Tax Policy Center. how do you view a position that I would have labeled frivolous, the 916 million? I wrote an article describing why the position was so untenable, but he's never caught. And so if you have a 20% chance of prevailing and you take an aggressive position and you get an opinion from counsel that, hey, there's an argument there, we just think you're likely to lose, is that illegal? What does it mean to be illegal? I think it's improper. And I think we need to give the IRS the tools to make that economic calculation of hide and seek uneconomic, so that taxpayers who are aggressive, who go beyond the pale, can face interest and penalties as well as the taxes that they owe. Right now, we don't have that. Some wealthy taxpayers have figured that out, and corporations have figured that out. And the $80 billion is going to help arm the IRS so that they can level the playing field, in their challenges before, both in audit, in litigation, and even in rulemaking.
I just added a couple of short things on, and I'm not an attorney, so I'm not going to opine on that. I would say that the New York State courts found the Trump Organization guilty in some related issues that I think sort of signified their approach to how they classified certain items for tax purposes. Outstanding litigation in the city of New York around the Bedminster Golf Club conservation easement that's still ongoing. We don't know the outcome of the audits, as I think Sarah said in her introduction. So we don't know how the IRS has opined on that question. And I think that's one of the issues that would be addressed by the former Ways and Means Committee recommendations, which would disclose the findings of an audit. Not only the tax returns, but the outcome of that. And I think that would be an important thing to think about as we look towards the future, and how the tax laws affect future presidents.
So I'm going to turn to Harry's question, which keeps us in a similar vein, which is, when the IRS identifies criminal tax fraud, does the Department of Justice's tax division have the resources and systems in place to effectively prosecute the case?
I think the answer to that, probably the short answer is no, but I'll let Steve weigh in.
Yeah, Jean, do you recall whether any of the $80 billion was allocated to the Department of Justice? I don't recall.
I want, and I'm going strictly from memory, I want to say that there was a teeny tiny amount that was dedicated there, but I'm not gonna. Yeah,
Harry, that's where I would start to see whether there's any extra funding. I know there's extra funding for Treasury to write regulations, for the IRS to hire more litigators. I don't know about Justice, but I would say on Justice, they around tax filing season every year, select a few high-profile criminal tax prosecutions. Beyond that, I don't think we see much activity from them. There was a lot of concerted effort when there was an amnesty period followed by prosecution of Americans who had foreign undisclosed accounts. And since then, I'm not quite sure what they've been up to. I would say, because I'm an equal opportunity critic here, to knock President Biden again, we don't have a nominated Assistant Attorney General for Tax Division, to my knowledge. Nor do we have, I think, an officially nominated Chief Counsel for the IRS, although there's one that's been rumored or reported in the press. I know people who have applied and have been considered for both of those jobs, very talented individuals who would pursue an aggressive strategy both to prosecute tax fraud and to collect civilly. I don't understand why we can't get personnel in place, to pursue what's an important agenda.
So we don't have any more questions unless someone has raised their hand. So I'm going to come back to one question that I wanted to raise earlier, we've sort of alluded to it a little bit, but we've spent a lot of time talking about what Trump's tax returns sort of reveal about these kinds of taxpayers in broadly, right? Ultra wealthy taxpayers with incredibly complicated returns broadly. But that is not how the Ways and Means Committee pursued these taxes. They pursued these taxes because President Trump was president, right? What did we learn about sort of about what do we learn from Trump's tax returns? Not Trump as a regular sort of ultra wealthy person with a complicated business, but someone who was then also simultaneously serving in office. I think, Jean, in your big picture thing, you mentioned some, complicated businesses in places where they might have foreign policy. Can you guys talk a little bit about what you learned or took away from Trump's tax returns that are sort of unique to him as president? And if I can tack two questions on some of the criticism for looking at requesting Trump's tax returns, I think the Wall Street Journal editorial board and others said, well, this is a slippery slope. Can you address kind of that as well?
I'll start on that one. And I'm going to start with your last question in the slippery slope. I do think the president and the vice president are different. And I think that's why the mandatory audit program is limited to the president and vice president. And I take privacy seriously, but I think I think it is so important that we have transparency around potential conflicts, around what might be influencing the decisions that any president makes as president. And I think that is why the mandatory audit program is important. I think that's why disclosure of mandatory audits is so important. Again, I mentioned at the beginning that I think one of the things that was striking to me was the consistency of business operations of the former president in places like Egypt, in places like China, Azerbaijan, Turkey. It's like sort of a who's who list in terms of foreign policy hotspots. Qatar, the UAE. And that's deeply troubling to me as somebody who cares about democracy. And sort of going back to the strategies that Trump used to avoid taxes. I think he made a big deal upon being elected that he was going to turn his business operations over to his children. Yet we know from the tax returns that he classified a lot of the losses that he claimed as active losses, which by sort of tax definition implies that he was actively involved in running the operations. And, that's because active losses are more useful from a tax standpoint. But it means that he was actively involved in making money, including from, some of these foreign policy hotspots. So I think that is an important issue. The timing, and Sarah, you highlighted the fact that there appear to have been some delays in terms of when the mandatory audit was taken. Not all of the audits appear to have been classified as mandatory audits as currently prescribed by IRS policy. I think we need to routinize that. And again, for all presidents, I think, that needs to be something that happens. And the IRS needs to have adequate staff to undertake the job. And anyone who runs for president needs to understand that they're going to have their pockets turned inside out if they're successful and are elected to office.
So once again, I'm going to agree with Jean. And she's right. The president is special. The president is the head of our executive branch, and the potential conflicts he might yet have, or she might yet have, are tremendous, including overseeing, in Trump's case, his own audit because he oversaw the IRS. And many object to the process by which Chairman Neal sought President Trump's tax returns, Code Section 6103F authority. And I think that concern was misplaced. That authority was placed there back in the Harding administration as an aftermath of the Teapot Dome scandal, which brought into question conflicts of the Harding cabinet. And then even Treasury Secretary Mellon was accused about that time of short paying his taxes and leaning on the IRS, then the Bureau of Internal Revenue, to give him a pass. And so that's the basis for the 6103 authority, how it came in place. It was used on Richard Nixon when Richard Nixon underpaid his taxes, as reported in the press, and the Congress investigated. Richard Nixon started by offering some of his tax returns voluntarily to the Joint Tax Committee, but the Joint Tax Committee needed a whole bunch more, and they got it through the 6103 effort. And since then, I guess we've neglected to say, every president, every candidate for president disclosed his or her tax returns for several years. Trump did not. And Trump operates a sprawling enterprise, which is even more prone to conflict, and I think even more deservedly needs a look. Now, having said needs a look, Sarah's first part of this two-part question, I had to write it down, so I do recall it. What kind of entanglements did we find? Well, as Jean notes, we find a lot of foreign source income, but look, we don't find loans from oligarch in any of these tax returns. And that's not surprising to me. When I testified, it's very hard. You can't just stop with the top tier entity or two entities that the Joint Tax Committee looked at, or the Richie Neal, Chairman Neal requested. You have to go all the way down to bottom tier, because at the top tier, you just have netted amounts. And even at the bottom tier entities, you don't have to, a taxpayer doesn't have to identify who a lender is. Only in the case of your home is a mortgage lender identified. So I never really expected we would see loans from Russian oligarchs in that level of detail. Yet you still can piece through a lot from looking at a person's tax returns. They really are a window into someone's financial affairs and their financial profile. There are the chance of finding conflicts. You can find out finances is someone successful or not. Trump loses money in his business every single year. He claims he's smart, but I don't quite get how he's doing that. Is he generous? Is a person generous or not? What's their philosophy about our tax system? Is it truly a voluntary system as we all partake in? Or does somebody view taxes as a sport or something to be gained? I think that's important for us to know about our president, both when someone runs for office and when they're in office.
You're just lucky I didn't make it a 3 or 4 or 5 part question, but that was great. Thank you. So we do have 2 more questions in the Q&A, and then we'll get to those and then just wrap up quickly. I think we'll be done for the hour. So the first question, how do we ensure that the IRS prioritizes tax enforcement on wealthy taxpayers? And why are audit rates so high for low-income EITC recipients? Is this an issue? And if so, how can it be addressed?
I think we take the Treasury Department, we take the administration's word that this money is designed to beef up and to build the systems, integrate the tech systems needed to take on wealthy individuals, big corporations. In short, one of the prime reasons why audit rates are high for EITC recipients is those are cheap audits to do. You know, they're essentially a letter that goes out to the taxpayer that questions something. Oftentimes those letters get lost, don't get responded to. You know, we could have a whole briefing on that topic alone. But if if you're trying to sort of keep up your audit rates and you have a complicated, expensive, potentially high payoff audit rate, but you don't have the staffing to take it on, or you can send out letters to vast numbers of EITC recipients that aren't going to even if they're quote unquote successful, even if they find a problem, aren't going to raise a lot of revenue. That's the situation we're in. Again, I think go back to the role of oversight and role of Congress, since most of you listening to this are staff of Congress. I think that, that's something to follow up on, is to make sure that that money does get spent and does get targeted where it's designed to go.
So again, I agree with Jean. I think that this is a very challenging problem that the questioner poses. How to focus resources on the wealthiest. In my experience, and as I've written, I think the wealthiest taxpayers cheat in very sophisticated ways, or I should say dodge taxes. I'm now trying to popularize the term dodge, which has no legal implication. But they dodge taxes by stretching the law, often beyond what Congress intended, and by avoiding being caught by the IRS. And it takes a lot of resources to catch them. You have to have sophisticated IRS employees, and the IRS employees have to have the wherewithal to pursue a matter to the end. And so that's expensive. And the Biden administration pledged, and like Jean, I'm taking the Biden administration at its word, to use its money to pursue that high-end sophisticated cheating. I think it's important, not just for the dollars that could be brought in, but for the signal it sends to everyone on the system working for all. Now, Jean also makes another good point when she talks about information reports being easy for the IRS to use against EITC recipients. And I also agree with Jean that the IRS should be judicious, responsible in how it pursues taxpayers, some of whom mistakes may be inadvertent and may not be worth pursuing or harassing. Now, having said that, I said earlier how I'm a big fan of expanded information reports, the 1099-Ks for Venmo and PayPal and other programs. And I think that's important because our so-called small businesses, which often turn out to be very wealthy individuals and cash businesses, they omit more than half the income they're supposed to be reporting. And I think if we had a clearer picture of what was going on, the IRS's job could be made a lot easier in terms of collecting from everyone their taxes owed, which will reduce the tax burden for all of us. I understand that there's anxiety amongst people whose income is now concealed from the government. What will the government do with that information? However, we need the government to pursue the taxes that are owed so the rest of us aren't stuck paying the taxes that somebody else owes. And so I agree that the questioner poses a really important question, but the Biden administration has pledged, Janet Yellen has written, that their target with the new funding that they get will be those who make more than $400,000 of income. Now, of course, since they may not be reporting that $400,000 of income, they may yet be hard to find. So we're going to have to look for the business plan that the IRS is supposed to come out with any month now on how they're going to spend the money and how they're going to devote the resources. That will help answer some of these questions.
Great, thank you. So there's one last question, and it's kind of a big picture question from Mario. How does Trump's tax return / the underfunding of the IRS reflect the state of wealth inequality in America?
I think Steve's last point begins to touch on this, which is why sort of some of the attempts to impose a $400,000 cap on where the $80 billion could be used. You sort of top line income doesn't necessarily matter. You have a lot of people with tremendous assets and wealth that, because of aggressive tax planning, show very little income. And you know, the Trump tax returns in the years where he had a loss, might not, depending on how you defined it, be subject to audit if he were a private citizen using the $400,000 figure. But I think going back to something I said earlier that to me was a takeaway from the tax returns, and it's the fact that the rich aren't like the rest of us. They make their money in very different ways. I mean, I think, if you look at the Trump returns, and I wrote this down in my notes earlier, I think it's striking just how little of his income came in the form of wages. $20,000 in the 2 years prior to taking office, his presidential salary while he was in office. We know from some of the leaks that have been made in a lot of reporting that's been done, as well as a lot of statistical research, just how different and how the wealthy use tax planning, use pass-through entities and the like to structure their income primarily for tax purposes. They also have the ability to bring on fleets of accountants, fleets of attorneys in order to take aggressive positions, take sophisticated, use all of the loopholes and gray areas of the law to minimize their tax bill, and use a small portion of their wealth in order to generate large savings. And I know we're at time, so I'm going to stop there. And thank everybody for some great questions and sticking with us.
So again, that question's a good capstone for our discussion. Wealth inequality. We would expect a billionaire to pay something like millions of taxes, not negligible amounts. And so when we see so few taxes collected from what's purportedly are the wealthiest Americans, that calls into question how effective our tax system is. As you all know, we have what's known as a progressive tax system. The more money you make, the higher tax rate you're supposed to pay. But Trump's effective tax rate, defies that situation, that intent. And we have to fix that. It just erodes confidence in our system and progressivity that we look to help wealth inequality. And I'll end with a pitch. Jean made a couple of observations about how the rich are different. I think they're different. They have a lot of capital assets, and we tax capital lightly. They also have something I've been writing about recently, a lot of retirement savings. Because our retirement tax system is upside down, it gives the incentives to those who can afford to save, who have the money and the income to save. And so if you look to the distribution of these tax expenditures from retirement, it's large. And retirement tax expenditures themselves are huge, $300 billion a year, the largest on the books. And so I'll end with a pitch. I'm sure Jean has ideas. I'm sure she'd be happy to offer you ideas. I also have ideas, and happy to work with any of you on developing ways to collect taxes to make our society more equitable. It's a challenge, and that's how I started working for the IRS in law school. I understand we order our social and economic behavior through the tax code, and I think it's important to get that right. And so there are resources, there are people who think about these issues, and we're always happy to help.
Well, that is a great note to end on. Thank you both so much. And thank you to our audience members and to those who asked questions. We will try to make this recording available. And with that, I hope everyone has a great rest of their day.